Well, hello there, everyone. And today is Monday, October 6th, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, including how to tag your trades correctly, confirming and non-confirming directional trade signals and opportunities, the keys to using straddles and strangles. He's also going to cover time spreads once again and why most people do them incorrectly. He's also going to share his option selection process for day trades and swing trades. And as a bonus, he's going to share with us how he uses all of his edges when issuing trades in the trading pit. It's going to be fantastic. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also remember, folks, that the chat is open to everyone, and we do have ground rules. Number one, always be kind. Number two, keep to the topic. Number three, no political discussions whatsoever. And also, folks, please keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger's going to be sharing. Because, guys, he's here to give us an edge and to help us all become more consistent and confident in our trading activities. Now, coming into today, we were looking at catalysts. And from his perspective, he says, look, guys, it's unavoidable. AMD, chips, AMD was up 24% and Micron was up 3% coming into the market. And it certainly had a big impact on the NASDAQ and the broader market. He also noted that crypto is a catalyst today as Bitcoin was setting record highs. On the tech side, we noticed that Tesla was up 2%. And folks, in the background, all the background noise is about the government shutdown and the fact that the Supreme Court is now starting its new session. And there are a number of things on the docket that have the potential to impact the markets. Now, looking at Roger's pre-market stock list, we can see that there were several shorts and several longs that he was interested in. On the short side, VRSK, DE, HON, and DPZ, each one of those have an asterisk, which means those were potential A-line setups, something that Roger really likes to look at. The others were good opportunities, but the A-line setups were VRSK, DE, HON, and DPZ. On the long side, we also saw some stocks that Roger really liked that were also potential A-line setups. CFG, ADA, and WEC all fell into that category. Now, the other caveat that Roger always shares is, folks, when considering these opportunities, please make sure that they clearly meet your guidelines for going long or for going short. And I expect Roger's going to give us an update today, a midday update, on which shorts and longs are on his current midday watch list compared to what he was looking at coming into the market. Now, as far as the small cap watch list is concerned, there were 4 tickers that were identified. SOPA, S-O-P-A, come in at above $4.05. Now, SPRD, you want to come in, pardon the misspelling there, above $39.11. And the reason I put $39.11 here is because I think initially it was $22 and then $37. It was moving pretty sprightly in the pre-market open. And the way you establish your threshold is you look at the pre-market high, and then that's your entry point. And we did see, once again, let me pull up my chart here. I saw it actually as high as $47.30. So from that perspective, it really was looking at a nice opportunity, and it looks like it hit that a couple of times. So for those of you that may have jumped in going long on SPRD, that would have paid off for you nicely. ONMD coming in at above 190, and in fact it did achieve a high of 284 if you got in at 190 and took advantage of that trade. The fourth ticker was FEMY above $1.05, and I don't believe it did anything. It didn't come close to that. Now, the thing that you have to remember about these small cap stocks is that Rogers' selection process is based on not only price action, but more importantly, extreme volume coming into the open. I'm talking about maybe 100 times what its normal volume is, because this is a small cap. There's no institutional money in small caps. It's all retail volume, and you need to see that kind of momentum coming into the open. The second thing that he always reminds us is that if you're looking at trading these, if you don't see an entry before 2 p.m. Eastern time, just walk away from it. It's not worth messing with at that point, because we're expecting that that stock is going to take off. It's going to move through its target objectives, give you a quick profit, right after the market opens, if it's going to do anything. But after 2 p.m., just bag it and look for something else. And also, never, ever, ever hold these things overnight. Now, as far as his closing comments were concerned, interesting. We opened the session basically saying, guys, the markets are up. AMD is up 24%, Micron is up 3%, Tesla's up 2%, and they're clearly driving the boat. But there were multiple red flags. Red flag number one, it's Monday, and it's really a good time for profit taking, especially in the first part of the day. Red flag number two, the bond markets were falling off and the VIX was moving higher. So despite the fact that we saw this pronounced increase in the NASDAQ, things of that nature, the internals were not supporting that. Red flag number three, the QQQE and the RSP, were all moving lower into their 8-day moving average. Red flag number four, stocks at the 50-day highs are way overextended. And so once again, from Rogers' perspective, look, guys, this is a mirage. Everything that we're seeing here at the open is all based on the performance of 3 stocks. So be very, very careful. He also said that we need to keep an eye on bonds and on SMH, which are chips, because once again, those are going to be the big drivers today, and to be careful and to wait until afternoon to consider any entries whatsoever. So today's agenda for Roger, how to tag your trades correctly. And he's going to do a lot of focus on confirming and non-confirming directional trades that he sees and how he likes to take advantage of them. He's also going to share the keys to when he likes to use straddles and strangles. He's going to share with us, once again, continue to go over time spreads, how to use them and why most people do them incorrectly. He's also going to share his option selection process for day versus swing trades. And as a bonus, guys, he's going to pull all this together and he's going to say, here's how he uses all the edges that he's created for himself when looking for opportunities and sharing trades in the trading pit. And I think that's, once again, that's a heck of an agenda. So if you've got any questions during Roger's presentation, folks, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also remember, folks, that the chat is open to everyone. So remember the ground rules. Be kind, keep to the topic, no political discussions whatsoever, keep side conversations to a minimum, and let the rest of us focus on the education and information that Roger is sharing, because, we know this, guys. He's spending his time with us to give us an edge in the market and to help us all become more confident and consistent in our trading activities. And with that, let's say hi to the team. Welcome, 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 everybody. Matt, great to see you, buddy. Happy Monday. Hope you had a nice weekend.
I did. Happy Monday.
Yeah, it's good times here. It's going to be an interesting week. I guess it's always an interesting week when it comes to the markets. But as I said, we've got these backdrop things that are going on. The shutdown, a lot of chatter and noise around that, not particularly impacting the markets at this point. Supreme Court just opened their new session, and I know that they're going to be looking at some critical things that have the potential to move the markets, and particularly that focus on the constitutionality or the legality of the tariffs and what that mean when they pick that up. And outside of that, once again, as Roger said, 3 stocks were driving the boat. Matt, what do you see here midday?
It's a nice grind higher on the SPY. But the thing I'm not liking is the internals. Like the signs are there that things are okay. Everything's above the VWAP now. Dow SPY QQQ, that was a big thing you were looking at. But the ADD is at -7, and the tick really hasn't gone anywhere. Actually, just hit a low of 650, which
Okay.
is nothing. I don't like that the bonds are coming down, but again, they're at support. RSP's above the VWAP. It's up barely on the day, um, but it's not moving with the SPY. Obviously, we have the Nasdaq catalyst today, so I don't know. We don't we don't look bad, but we just don't look great.
I
Yeah.
think
Kind of
it's
at
a
a
good way of
standstill.
saying it. And I think, Matt, what I hear in your voice is resist the temptation of FOMO, guys. Keep to your discipline. Remember what you're looking for. Let the market come to you. Don't focus on anything. Because I can sense, Matt, that you'd like to jump in there and make a trade, but you're just not convinced.
Yeah, yeah, no, I'm not.
Yeah, and it's a Monday. It's a
And it,
Monday.
exactly.
Good morning,
Hey, Roger,
everybody.
good to see you, buddy.
Good morning, everybody. I hope everybody's doing great. It's just one of those Mondays right now, and yeah, the markets are not. I would hate to say I told you so, but pretty much everything we said this morning, kind of. Remember, I told you don't fall for the banana in the tailpipe first thing in the morning.
Exactly.
It's not. It's not. It's. There was a lot of signs. There was a lot of signs. The VIX was still up. The bonds are down. The only thing that was really up is AMD. And by the way, good morning, Raleigh and Matt. Haven't seen you, Matt. It's the longest I haven't seen you in like a month.
Yeah,
That's my drink. Here we go. So it's a choppy market. I mean, it's not a bad time to mess around. Like I was bored. I was just sitting here. I took a little Oracle trade. I think we made like almost a buck in like I don't know in like I don't know. Let's see how long it took us to get into the trade or not. And then I realized we have a short Oracle. And I took a long Oracle and we had a long Oracle, but this was just a quickie. It wasn't anything long. Let me just quickly take a look here. All right. I got in at 293.19 and I gave an alert to get out at 294.04. Let's see how long afterwards. Well, I told folks that I'm waiting for it to break the VWAP, so I kind of gave them a heads up. 11:40, 11:50, 11:50 we got filled. 11 so we were in the trade for about 6 7 minutes and it went up to about 294.14, so almost a buck after we got in and I took profit, and it looks like it's still holding on if people still want to swing it. I don't think we're going to be in the gap to green that much longer if it keeps staying above this line. Am I correct in saying that, Matt?
you are correct.
Yeah, I don't think that trade is gonna. Does not look like it's going to continue moving to the downside. So I'm almost at the point of writing that trade off. Let me say hello to everybody here. I don't mean to be rude. By the way, today is my 24-year wedding anniversary.
I
It's
know, Roger.
Yeah.
Congrats,
Thank
buddy.
you. Thank you. It's I've been with my wife for over 25 years, but today was our wedding day. So
Okay.
uh, good, 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 good. Let me say hello to everybody here. We got Steven, we got Andre, we got Ken. Good morning. Tim, Peter, Gaetano, Jill. We got Vernon, we got Mary. We broke 800 people this morning, by the way. We had a record this morning,
I
Raleigh.
know. Isn't that awesome?
I told folks about a year ago that we're going to get up to about 900 by the end of the year. I think we're going to get to about 900. I think we're right in that vicinity. Vernon, Mary, Don, Wade, Flying Ronin, Cyrus. We got Penny. Good morning, Penny. We got Ken. We got Jeremy. Jeremy. We got Diana, Ivano. If I'm mispronouncing your name, I apologize. Candy. We got IP. We got Catherine. We got Jim from Irvine. We got Matt. BFONES. Hello there. D47. John. DLR. Kurt. Adam. Liberty. Thank you, Liberty. Jim. Candy. Thank you, everybody, for the warm wishes. I appreciate it. Thank you. Thank you. Thank you. Thank you. We got Fluffy. We got Greg. We got Gus. We got Elizabeth Arnolfo. We got everybody here. Estelle. Thank you, Estelle. Thank you, guys. Thank you. Thank you. Thank you. Congratulations. Thank you. I appreciate it. DR, Lisa, Serenity, Mark. Scott, thank you guys. I really do appreciate it. Very kind of you. Very nice of you. Very nice of you. Brian, if you didn't get a text, make sure you have the pit. It was in the pit channel. In the pit channel. Good, 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 Gina. 31 years. That's as long as I've been trading. In January, it'll be 32 years. And let me just say hello to everybody on YouTube, and then we will get started. Let me get that here. Right. Just pull it up here. And you know what, Raleigh, we called a stock this morning on the morning show, a couple of stocks, and boy, oh boy, a few of them actually.
These were those A-line stocks you were looking at, Raj?
No. Those small caps. I was looking.
The small caps. I covered
Yeah,
that with
yeah.
the guys here in the room at the open there. I mean, SPRD, Roger. The pre-market was actually 39.11, and it went as high as 47.30, and it hit that twice.
Wow.
And ONMD, the pre-market high was 190, and it hit 284.
Yeah, so that's, if you think about it, that's, from 205 to 284, you're talking about a 75% increase.
Yeah, I know.
Without having to do the option.
Right.
That's pretty significant.
Yep.
That's pretty significant. So we didn't do so bad on them. Hey, Kevin, Tanya, Steve, Seth, JB, Omar, Afadias, Naples fan, Seth, Dave, SJ Rosh. Thank you guys. I really appreciate all of you. And you might have noticed the clarity of my picture is not that great. I'm on a backup webcam. This is my travel webcam, and I don't have the lighting set here. I'm in a hotel room, so I'm doing the best that I can. But I did bring a good mic with me, so you guys should be able to hear me very, very well. Am I correct in saying that, Raleigh?
Absolutely.
Yeah,
you sound good. Yeah, and you look good. You looked good too, brother. Everything's
good. I
working.
appreciate it.
5 by 5.
Good. Excellent. I don't want to mess anything up here. All right, so let me quickly take a look at those stocks. Let me take my screen, take a look at those stocks, and then I want to give you guys a really good lesson. Also, just FYI, I will be doing, Matt, I don't know if you're even aware, but I'm going to be doing what we're going to do Thursday, Friday here in this room, and maybe Monday if we don't finish up. We're going to do the live class for Data Miner, okay?
Awesome.
So it's going to be Thursday, Friday. What we'll do is we'll do the class for about half an hour, and then I'll do half an hour of Data Miner. I'll do it Thursday and Friday. I'll probably not finish. I probably won't finish till Tuesday or Wednesday of next week, because you guys know I like to go really deep. And so we'll be doing, and then that half an hour, Matt will tell Deanna when we're done with it, and she'll carve it out and put it in the members area. Okay. So now everybody knows what the routine is. So I told your brother, Raleigh, I told Cam, I'm like, hey, we're going to do a live class Thursday, Friday. So if people ask you about it, just tell them, let's not jump to anything, because it'll give Matt another couple of days to go through all the mistakes that people are seeing. Tell the developer, and then it'll give me a little breathing room. I'm going to come back tonight. I'm leaving Florida. I'm leaving Miami tonight at 5:00. I'm going to be home at 7. Tomorrow, business as usual. I'll be back in the office with Matt. Give me a couple of days, and we'll do that live. That way, if there's a problem, we can all address it live. If there's a solution, we can all address it live. We can do it together. Okay. So Perfect. We'll do that on Thursday. We'll do that on Friday. This way, if you don't have Data Miner, you could see what all the big hoopla is about. And if you have Data Miner, we're all going to go through it and do some hypotheticals. And we'll see what's working, what's not working, what I need to change, what needs to stay, so forth and so forth and so forth. And I hope everybody understands that and everybody wants the same thing. I'm trying to make it work for everybody, okay? So that's that. I want this to be really, really great for everybody. Okay, so now let's talk about the market. I still have plenty of time. I don't want to get off base today, and I have a lot to talk about today. So one of the things I warned you about, and folks, if you, I'm not trying to tell you to come to my morning show. I think you all know the benefit of that. I give you my levels. I give you hot stocks. I give you small cap stocks. I pretty much tell you how to make money every day, okay? But if that's not good enough for you, today is the most perfect example of why I make such a big darn deal about these catalysts. More importantly, about why it's so important for you guys not to get the wrong catalyst. So today is like the best example I can humanly show you. So why do I talk about all these catalysts so much? Well, if you don't know what today's catalyst is, then you will not understand why this is happening. Now, does it really matter why it's happening? No, it doesn't matter why it's happening, but why it's happening could be useful for what it's causing and why it's causing it and why we should react a certain way. So let me teach you this because this is a very, very good teachable moment, and they don't come. Ray's asking how we can access the morning show. You just Raleigh will give you a link to my Telegram channel, and I post it there every morning. He'll give that to you.
I'll put that out there for everybody. Yep.
Yeah. Thank you, sir. So back to what I was saying. It's really important. Let me walk you through this, okay? I wouldn't usually do this because we spend about half an hour on this in the morning, but this is such a good example. I just can't let it go by. So this morning, AMD, which is one of the biggest stocks in the NASDAQ 100, one of the biggest stocks in the SMH, it rallied like, you know what, I don't even know how much. Let's take a look here. It rallied up. This stock rallied up. Come on, AMD, 28%. Now, AMD is not like Gap or Levi's, okay? This is like a major player. This can move the market. As a matter of fact, if you look at SMA, you know, I'll do this faster because I want you guys to see it in real time here. Okay, let's see here. An Oracle went back above to 294.03. If you missed that fill a few minutes ago right here, you could have gotten it right here if you wanted to get out of Oracle. But I still like it. I still like how it looks. Anyhow, let's. I just didn't want to be in this while I was on the show. But so, for example, look at SMH. Look at SMH. Look. Okay, now look. Look at SMH. Look where SMH is. Do you think look at Oracle? I mean, excuse me. Look at AMD, and look at SMH. Now, I'm going to take this apart for you because I want you to see this. Look, SMH. We're going to do this mathematically, okay? And Micron too, Cyrus. But you're absolutely right, to a lesser degree. Here. Let me show you this. Look, constituents, right? This way you can mathematically see what I'm talking about. Mathematically, not theory according to Uncle Roger. Look where NVIDIA is. Look where AMD is. Where's AMD? Right here. It's almost 5% of the index. The stock is up like 30%. And Micron is up too. Those were both catalysts today. If you take away all this market cap from here, and MAGs, by the way, are not really doing all that amazing right now. I mean, they're doing okay, but they're not up here. They're now, remember this line I drew? They're just coming up here right now. But if you take away all that, you're stuck with this, with RSP, which is only up 0.12. You're stuck with this. NASDAQ 100, which is only up 0.57. This is down. All action, it made a high at the open. Look. It made a high at the open. RSP, it made a high at the open today. At the open. This is all going down right now. Okay? Let's just see.
It's pretty much what you predicted.
Oh, it's exactly what I predicted. But again, if you did not know, if you just came in today and said, the NASDAQ's up 200 points. Oh, wow, I'm going to make hey, how come my favorite stock is not up? What's going on here? Wait a minute. You would have no idea. You would not know why it's happening and how narrow this rally is, would you? This is why it's so darn important. This is why I spend 10 minutes with you every morning talking about catalysts. Catalysts can help you predict what will happen the first 15 minutes of the day, first half an hour of the day. You could see, and similarly, if you make a mistake and you name a catalyst and it's not really a catalyst, you're going to be watching the wrong horse for the first 15 minutes of the day. So it's really, really important not to get the wrong catalyst, and it's really important to get the right catalyst because you could see today unfold in real time, just like we did. And there was no surprises whatsoever. I mean, whatsoever, Okay. Now, do I hate the market? No. If AMD stays up there and MAGS right now decides to catch up, and by the way, MAGS is starting to look pretty again. It bounced off the 15-day, and we're above this line that I drew for you about a week ago. Do you guys remember this?
Yep.
We're back above that line. We're not doing bad, but we're not 200 up, 200 points up like you guys think we are. We're not. We're doing okay, but we're not. We're at a typical Monday. Now, Monday, bonds, bonds coming down, Monday morning, Dow Jones, negative for the day. This is really what the market's looking like, folks. Now, is it looking bad? No. Is it looking like this, though? No, it's not. That's crazy crap, okay? By the way, we're right at our resistance level right now. We broke down below it. We tried to hit it again, so we couldn't back away. If we hit this and we back down, hello. Right here. I'm going to add another. Keep an eye, folks. Write this down. Keep an eye on 344.43 today. Hey, Omar. Good to see you, man. Good to see you. Very good to see you. Thank you. Omar sent me all of his trades. I didn't post them for you, but I posted a doc for you in the members area. I mean, in the VIP room, in a Telegram channel that has his monthly performance for the last 3 months, okay? So I gave you all the levels. I gave you all of this. We're just I'm just watching stuff here. Let me just let them know if they didn't get out of Oracle yet. They can get out right now. Hold on. Folks, I apologize. I got to take care of business. Hold on. Business. If you missed here, if you missed exit on Oracle, now at 294, what is it? 07. All right, there you go. That way, nobody's going to get upset at me. Protecting myself. Okay. All right. So now, there's my alert for Tesla. See, folks, I have alerts here. Now I gave a bonus trade on Tesla, and I gave you an Oracle trade. See, I'm using alerts. Breakout, past VWAP, just like I teach you guys. I also gave them a bonus Tesla for good measures, so they wouldn't eat me while I sleep. Okay, don't want people eating me while I'm sleeping, and I'm keeping the.
That's a horrible idea.
Yeah, I'm keeping the chat closed. So that I don't get distracted. Okay, folks, I'm going to give you a couple of stocks that we're looking at. Let me just take a look at those small cap stocks from this morning. SOPA didn't hit. SPRB did hit. Holy moly, look at this. 40, like Raleigh said. Yep. And ONMD, it did. Look at this. It hit our price of 205 right here. Mm-hmm. It did it about an hour after the market opening, so you guys had plenty of time. And then over the next 25 minutes, it went up from 205, our entry, all the way to 285. Mm-hmm. And I'm pretty sure most of you would have taken profit at a 75% profit. And if you did, post it in the chat. I'm sure Raleigh will repost it for all of us. Yes, let me just put this here. Matt, have you taken any trades yet this morning?
We have not.
Yeah.
A lot of commentary, no trades.
Commentary's good. People like commentary. Commentary's good. Mm-hmm. Okay, so let me give you stocks that I'm looking at right now, folks, okay? I'm not going to give you the options because I have a lesson for you for today, but I want to show you some goodies. Okay, I want to show you some goodies. Wings. Only look right here to the left side. Let me make this big. There we go. You don't need to worry about any of this, and you don't need to really worry too much about this right now. I'll make this small.
And you're starting with the shorts, right, Roger?
Yes. Yep. Yes. Always starting with the shorts. Okay. Nice breakdown. It's actually an A line. It's not overextended. It's still close to the 8-day, and it's not beyond this level. Wing. CL. I've been giving you this stock. I believe I've been giving you this stock every day for about a month now. And look Look what's been, it's for a short, and how's it been doing, guys? Almost every day I've been giving it. This stock has been on my watch list, Matt, for what, about a month now. Would you
Yep.
agree?
Yeah.
I've been saying it every day for about a month, and here it is. If you guys made money on it, why don't you let Raleigh know about it in the chat? Wrong one, wrong one, wrong. This one right here. Tractor breaking down, not that overextended, below the 200, below the 100, breaking the 200 right here. Something that we definitely want to keep an eye on. Okay. T-Mobile. Ooh, this one's getting a little ahead of itself. We have to wait for a pullback. I'm going to talk about these right now, and I'm going to give you guys a good lesson right now. Team. This looks very nice right now. This is a very nice looking short right here, not overextended. Matt, add this to your watch list, would you? Team to the short side,
Yep.
and this one too while you're at it. I might have given it a little late, but I really like this one a lot. To the short side, I'm a little more forgiving for stocks that are a little overextended to the downside because stocks move faster and they have more momentum when they're breaking down. So I'm a little more forgiving to these type of trades than seeing that to the upside. Just FYI, generally speaking, not like if it's down here, but still pretty close to the 8-day. If this was like maybe down here, I would say no. But what I'm doing is looking at the low here and saying, hey, we're not really all that overextended. Okay, let me just see how Oracle's doing around here. Yeah, still holding up pretty good. Let's see how Tesla's doing. Oh, good. Tesla's right about KMB. All right, next one. Another good one right here. This one is not overextended at all. This is a perfect A-line to the downside, by the way. Okay? Okay. And the lesson that I'm going to give you today, Penny the helicopter. You guys know Penny. She's a active member here. She was actually asking me questions over the weekend, and I was giving her answers. I was like, that would make a really good lesson for everybody. So the lesson that I'm going to give you, if you guys enjoy it, you can thank Penny for it because she brought it up. I'm going to give it to you guys in a few minutes. Okay. Okay. And I'm being a good man. I'm keeping my I'm going to the longs now, and I'm keeping my chat closed. I'm behaving myself. IBM. I like IBM. Believe it or not, I still have IBM from all the way over here. I still have IBM long. I have not given up the ghost. Actually, no, I gave up half of my position. I still have half of my position. I don't want to lie to you. AGI. There. Oh, that's a nice looking stock. Hey, Matt, make a note of this. AGI, would you? And you know exactly what kind of a setup this is. Okay. Let me go back to that. I'm going to have to go back to this in a minute. Okay. All right. VKTX. This is a nice breakout in the gap. Matt, a good potential for a gap to green, by the way. Look. Well in the gap. I need that because when they first start getting into the gap, those gap areas create very strong levels of. So I want to show you guys something. There's a lesson here. I wasn't intending to show you this, but I want to show you this. Look, right here and right here. See the gap? When you have a gap, that gap creates a extremely strong level of support here and a very strong level of resistance here. So a lot of folks say, hey, buy when it goes right into the gap. That's a very dangerous area because all the people that lost money here are going to take profit. You want to buy it when it's well into the gap, like when the gap is not being harmed anymore. Same thing with IBM. Look at IBM. This created a big gap right here. This created a big gap right here and right here. Look how long it took to get out of here. But once it got out of here, finally it moved. My point is, don't get so excited when you see a gap fill. Let that gap fill confirm. Okay, and that's actually what we're going to be talking about right now in our lessons. Right? And folks, Oracle went all the way to 294.24, so you guys should have gotten out with a profit. If you missed it, if you were late, whatever reason, there's no excuse. Raleigh, anybody make money on Oracle?
I don't see anybody on the Oracle side,
Oh.
but they certainly did make some money on the small caps that you talked about, and also on a couple of the shorts that you mentioned pre-market today.
All right, all right. Let me know if you guys made money on the Oracle. A little scalp on the Oracle. Curious. All right,
Oh,
next.
Christopher did. Yeah.
Oh
Okay.
yeah.
Yeah. Oh, okay. Christopher. I guess
Yeah.
this is Stacy. Oh, Stan. Yep. Oh,
Yeah.
several people chiming in here.
Yeah, yeah. See, they're very
They were shy, Roger.
they hold out on me,
They were
Raleigh. They hold
shy.
out on me. They hold out on me. IO and Q. Now, I gave you the stock and I told you guys to take profit on Friday, and we made good money on it Friday. But I told folks in the pit, I always tell you, all of my trades are good for swing trades. I would never, ever, ever give you a stock unless it was a good swing trade. So I told folks to make money on it. It's still not overextended for a swing. It's still not overextended. Just FYI. Oscar. Like, reminds me of Oscar Mayer, right? But they have nothing to do with each other. This is overextended right here. So we want to wait for it to come back, but I would keep an eye on this stock, okay? I would keep an eye on this stock. Hey, folks, how's that Tesla bonus trade I gave you in the pit working out for you? Tell Raleigh, don't tell me. I'm not looking at the chat. I like this stock a lot. Matt, add this to our watch list, please. We may have a good debit spread here on UNH, especially if it comes back
Matt
down.
says great on Tesla.
Yeah, nobody's complaining, are they? Yeah, nobody's complaining. You guys,
I think
go
that
ahead.
what's interesting, Roger, is we have a number of people that have never been here, and they're kind of like, "What's going on? What's happening here?"
Yeah, you guys must.
And
hate
guys,
the-
be patient. Be patient. Yeah,
They
just
must.
be patient.
I'm going to tell you. You guys must hate my pit program. You must absolutely hate my pit program. I mean, all we have is losers there, right?
Holy smoke! Maybe 6% of the time.
Yeah, 6% of the time. Statistically, that's right. Now over 400 trades now, Raleigh.
I know, it's amazing.
Pan W, nice looking stock. Nice looking stock. Very nice looking stock. And PDD. That's a beauty right there. Oh, I don't know why I'm not long this stock. I'm going to go and buy this stock. Matt, do you have a place to put this stock?
I will look.
Please do, would you? Please, for all of our benefits. Okay, cool. All right. Just wanted to also point something out to everybody before we start our lesson for the day. That if you look at sectors right now, you could see very clearly, communication services. Well, this is Meta, guys. This is Meta and other stocks. Whatever we're seeing on technology. So hard tech, like chips, hard tech, not soft tech. Hard tech is doing well today. Thank you, AMD. But if you look at communication services, this is Meta and a lot of large tech stocks. This is really offsetting, okay? So this is, I'm not like in love with what I'm seeing here. That's all I'm trying to tell you. This is not a runaway bull market. There's a lot of red flags here, and it's a Monday. It's a Monday. Okay, now I'm going to give you guys a lesson, okay? Now, I'm going to give you a really, really, really valuable lesson right now, okay? Let me see how many people we have in the... Yeah, we got a lot of people here. So I want to give you a lesson. Now, I'm going to teach... So I'm going to kill 3 birds with 1 stone right now, okay? I'm going to teach you about tagging trades, explain to you the danger of, actually, I'm going to teach you 4 things right now, folks. We're going to do a quad education, but I'm going to be able to kill like 4 things at once. Now, I hope to God you guys pay attention to what I'm going to teach you right now, because A, it'll save you a lot of time. It'll prevent you from making a lot of mistakes, especially a lot of mistakes beginners do. And it'll help you understand the limitations of visual backtesting. It will give you a limitation. It will explain to you the relationship between stocks and the markets. And I will teach you how to. So I'm going to show you and teach you all the type of trades I do in the pit, explain to you the danger of tagging and the limitations of tagging, explain to you how market cycle plays into all of this, and really open up your eyes to how limited you are by the factor of dependency on the market. I'm going to teach you all of that right now. Okay? So, it would behoove you not to pay attention. Okay? So, so, let me start off by this. Let me start off by this. As far as directional trades, and this doesn't apply just to the pit, this applies to everything Matt and I do, okay? We do 4 types of directional trades. 4 types of directional trades. I'm going to write them out for you right now, okay? Here. So everything I'm teaching you right now, it applies in the pit and any of my other swing trading programs. So it's not just limited to the pit, okay? Okay, so breakout, confirming, breakout, non-confirming, pullback, confirming, pullback, non-confirming. You'd be a fool not to pay attention to what I'm saying right now. Literally. And I'm not trying to call anybody that, but you would be a fool not to pay attention to what I'm talking about right now. Penny's only been doing this for 35 years, and this was very helpful to her. If it was helpful to her, it's probably going to be helpful for you. Okay? So, what does each of these look like? And why is it important? And why is it not important? I'm going to explain it to you. So, let me just move this here. Let me take a picture, a screenshot. Let me take a screenshot. Just something to have to write on, okay? Forget about this. So this is price act. These are my support and resistance line. You can pretend this is the 8-day EMA, and you can pretend this is the 15-day EMA, and you can pretend that this is those bands. You know those bands I have right here? The bands above them.
Bands? Yep.
Yeah. You can call them deviation bands, but they're more like price bands. They're not really standard deviation. That would be if it was technically you're right, but I just want to be really clear. They're not measuring deviation, they're measuring ATR. But for most people, they don't really understand the difference. So, yes. Raleigh, I'm being really nitpicky.
Oh no. That's
I'm just trying to be really like I don't want to like you're right. You're not wrong, but from the big perspective, but it's just using a different way to get to the same deviation. All right. Again, I it's my pet peeve, but I like to be really clear. Because what happens to me, the way my mind works, I go 55 miles per hour, and then if something is not clear, it just makes me. It's like pow. I get really confused. So I don't want anybody to be that way. Okay, so these are our deviation bands. Okay, so look. This is price. Okay, price is breaking out. This is a breakout, right?
okay.
Price is breaking out, right? Okay. Are we going to buy right here, or are we going to wait for price to hover around here a little bit and then break out of this area again? Okay, if we buy right here, we're buying on a breakout non-confirmation. If we're buying here, we're buying on a breakout confirmation. Does everybody understand what I'm doing? Mm-hmm. So for breakout, whatever that breakout price is, it's trading above last 5 years high. That's a breakout. Or it flags here for a little while, and then it breaks out again. That's a confirming breakout. That's a non-confirming breakout. So going back to where was I? Where's that? Oh, where is it? I wish I had a couple of other monitors here. Okay, here we go. So here, you see this, folks? See breakout confirming, breakout non-confirming. Okay. So this is a breakout, and then it can, you could take it right here, or you can wait for it to flag, and then boom, breakout again. That's a confirming breakout. So on your trading view, or your trading sync, or your TradeZilla, whichever you prefer to use, you would write, and you could create your tags any way you want. But would be a breakout, non-confirming, or a breakout confirming. And you could use if you want to use a star for breakout confirming and a fish for, I don't care, but you need to know what it is, okay? So breakout non-confirming, breakout confirming. So again, this is price. And you know what? Let me show you actual asset. This is the S&P 500. If you took the trade right here. Okay. So you see that if you took this breakout right here, this breakout, that's a non-confirming breakout, okay? If you took the breakout right here, that's a confirming breakout because it confirmed this price. Confirming trades, period, this is across the board, have a higher win rate. Confirming trades have a higher win rate. Non-confirming trades have bigger profits. Higher win rate, bigger profits. You take your pick. Most of the trades we do are confirming trades in the pit. Confirming, non-confirming. So far, Raleigh, I'm not checking for questions. Is everything I'm saying pretty darn clear?
Yeah, absolutely. A lot of focus on the dotted lines.
On the what?
A lot of focus on the dotted lines. What are they? How are they calculated?
That's these.
Yeah, exactly. So
these are that's okay. So I took the 10-day ATR, and here's the 10-day ATR. See this $4.73?
Right.
I add it to the 8-day EMA. That's this right here. And then I subtract it from the 8-day EMA, and that's this. That's this number right here, folks. This number right here, added to the 8-day EMA, and then add it to the 8-day EMA, and then subtract it from the 8-day EMA. That's the 8-day EMA right here. Mm-hmm. That's this number, add it and subtract. Whatever chart I give you, $7.03, IBM, add it and subtract it every time. It never changes, and it's right here. Here's the formula for it. 1.5 times the 10-day ATR added to here. This is the 10-day ATR. I made a mistake. It's not this. It's 1.5 times this added and subtracted. Not this. 1.5 times this. Right. 1.5 times that. Sorry, 1.5 times. I take this, I multiply it by 150%, and I add it to this yellow line, and I subtract it from the yellow line. That's all this is. It's not a special formula. It's not like a black box miracle system.
It's not Bollinger Bands. Yeah.
No. That's why I don't use the word standard deviation, because Bollinger Bands use math, and it deviates based on the math. This deviates based on ATR. So it's actually price deviation, not. But again, I'm being picky, Raleigh. I'm being really picky. So you guys.
No, it's good because people are hanging on your every word.
Okay.
And they're looking at the value of what you're plotting on your chart, Roger. And there's a lot of people here that are new, so they're not used to what's the blue line. What are these things? So just hang in there, folks. You'll get it.
Yeah, and remember, we repeat that we're very, very boring here. I talk about the same thing every single day. People still come after 8 years, but I'm really boring. After you watch me for a few weeks or a month, it'll be like a movie. You'll be able to predict every word that comes out of my mouth next. I'm not joking with you. Okay? I am the most boring guy you'll ever meet. I never ever do anything different, and I only talk about the same thing. But somehow I've managed to talk about different things every day, even though I'm talking about the same thing every day. It's kind of fun. It's really ironic. So let me go back to my example. So I just showed you. So for example, this right here would be a breakout trade. Right here, look, this would be a breakout trade right there. See how we're breaking out?
Mm-hmm.
There, let me go back. Let me just go back here. This way people can see what I'm talking about. Okay, see how we go down, we break out, right? That's a breakout. Okay. That's a anticipatory breakout. That's a confirming breakout right here. Okay? That's an anticipatory breakout. This is a confirming breakout. It's above this price. So again, always ask yourself, are you confirming price action or are you anticipating? Now I'm going to show you the same thing for pullbacks. Okay?
Now, Roger, the people asking what the blue line is. That's a moving average.
The blue line is a 15-day
15-day
EMA, and the
EMA.
yellow line is the 8-day EMA.
And they're critical, folks. Yep.
Yeah, and I use the blue line for my stop losses and my blue line for entries. I mean, yeah. So look. I want to explain something to you guys. Look. So look. This is a 2-week high, a 1-week high. This is a 2-week low. I buy stocks that are trading above the 1-week high, and I don't like stocks that start trading below the 2-week low. 1 week high, 2-week low. 1 week high, 2-week low. 1 week high, 2-week low. You better remember that rhythm. It will help you make your next $1 million. That's what's helping Omar do it. By the way, these are the levels I gave you this morning. Look at how well they're holding so far.
Oh, man.
These are my levels that I gave you all my morning, and I posted in the Telegram with the timestamp. And there was 800 people here watching me draw them. Not bad, right? Look at this. Not bad. Not bad. Okay. So let me continue now with the same example with, we're only getting started here. Let me just erase some of this stuff. So again, breakout. You have a certain price. If it goes above this price, it breaks out. Or it breaks out, flags a little bit, and then breaks out again. You got a breakout confirmation. Similarly with pullbacks. Let me show you pullbacks. So that's the 8-day EMA. That's the 15-day. This is the yellow line. This is the blue line. Okay, guys?
Okay.
Okay? Forget about hammers and all that crap, Tom. Don't worry about hammers. So here's a pullback. Look. Why does it do this? Why does it?
It's trying to interpret a straight line.
I'm not asking you to do this, buddy.
It's AI.
No, you're right. So look. Boom. That right there is an anticipatory. Now, Matt loves these type of pullbacks. He loves these type of trades. The stock is going up. This is the 8-day EMA right here. I see Matt doing these trades all the time. I see them pull up, and then towards the end of the day, the stock starts coming down pretty aggressively, but it gets right to the 8-day EMA, and it doesn't stop. Correct me if I'm wrong, Matt, but Newmont Mining was that type of a trade.
Correct.
And the one before Newmont Mining was that type of a trade. Which one was that? Do you remember? Was it GE?
I think so.
Boy, do I remember my goodies or what? I can forget anything, but I am not going to forget price action.
Yeah.
So that's a pullback. That's a pullback anticipatory trade because you're buying it when it's above the 8-day EMA, but you're praying to God that it's going to stop above the 8-day EMA.
Right, and reverse. Yep.
And reverse up. Yep. Then you have these type of trades. That's a confirmation. That's a confirmation. So I'm going to show you again. Breakout trade. Breakout confirmation trade. Pullback anticipatory trade. Why does it do that? Pullback anticipatory trade. Pullback confirmation trade. Now you're so my suggestion for you would be a good example. So here's a good example. You see the 15-day EMA? You see how it pulls back to the 8-day EMA right here? And then it goes to the 15? That would be a confirmation right here of this trade. Right here. Okay? That would be a confirmation when we come back up above this level. So I just showed you two. Now I'm going to teach you something really, really important. Okay? I'm going to teach you something really important right now. And this is where people get really confused. Let me just see how my stocks are doing. Still doing pretty good here. Yeah, still doing pretty good. I like Tesla for a swing right now. I gave some folks a swing. Now, so you want to write down this right here. Now, here's the problem. There's always a problem, right? Just when you think you learned something and I've taught you something, there's always a problem. Here we go. So now I'm going to teach you. Now, you remember I always teach you that a lot of gurus, they give you a little piece of the puzzle and they don't give you the rest, and all the money's in the rest of it. So you think you just learned this and you think this is great, and it is. And you should label every one of your trades from now on like this, and you should put them in your journal. So Roger, what's the part that most gurus don't tell everybody? Okay, so this is the $1 billion part here that you need to pay attention to. You need to have a large numbers of these in your database over many, many different periods to really see which ones you're good at. And let me explain to you why and what happens and what will happen to you. Okay? And guys, this is the part you need to really pay attention to. Knowing this and just being able to tag your trades this way will do you no good, and let me explain to you why. That comes from over 20 something years of experience. And I tell these to folks and they're like, ugh, I never thought of that. So see, this is now what I'm about to explain to you is a perfect example of knowing enough just to be dangerous to yourself. Mm-hmm. So this is Tesla, okay? But let's pretend this is the stock market. Let's pretend this is the S&P right now, okay? And you're tagging your trades, and you're doing everything I just explained to you, and finally you understand the difference between a breakout trade and a pullback trade, and finally you understand the difference between a confirmation trade and a non-confirmation. So now you're like, okay, I got it, Roger, I got it. No, you don't. You think you got it, but you don't got it. Now I'm going to explain to you the part that nobody wants to teach you. So pretend now this is the market. This is a confirming pullback trade right here, right? And now assume this is the market, okay? Well, let's say the market right now is doing a pullback confirming pattern, and you happen to be in 3 stocks that are doing confirmation pullbacks. Or let's say you're in 20 stocks that are doing pullback confirmations. And guess what? They're all going to work your way. And you're going to all of a sudden have a journal that shows you that pullback confirmations work amazingly well. But what somebody forgot to tell you is they're all working out well because this particular market cycle, the market's doing is mimicking a pullback confirmation. Ah. Yes. So, and this is the email I get, Raleigh. Roger, I've been doing this type of trades, and I've been doing these type of trades, and I've been keeping a real close eye on my trades, and every one of my pullbacks worked, and none of my breakouts worked. Your breakouts suck. Dude, what time frame are you looking at? Well, over the last month. And how many trades did you take? 20. And what was the market doing over the last 20 trades? It was doing a pullback fill. Gee, I wonder why your pullbacks worked so well. Your stocks are going to mimic 70% of what the stock market does. So before you start writing me a nasty email or an amazing email about how your pullback confirmations work or how your breakouts work, watch what the market did during that time period. Hence, before you know if any of this stuff works for you, you need to track them over several different periods so you could see how well your breakouts work when the market is pulling back, and you could see how well your pullbacks work when the market is breaking out. So after you get 30 or 50 samples from different market periods, then your journal will start making sense. You thinking you've discovered the Holy Grail because your 15 A lines worked, that probably means the market was just setting up for a beautiful A line like it was the last 2 weeks. Now, what's the point of me telling you this? I mean, I'm telling you this against my own interest, right? I could just tell you how great I am every time and have a sale on the A line every time the market pulls back because 100% of my trades are going to be winners, right? But I don't play that game. Now, some of you are probably going, what the hell did he just say? And some of you are going, this guy just reinvented the world for me. Now, so do you understand the limitations of looking at this stuff in a short-term time frame? That whatever the market's doing is that pattern is going to hit hard for you. That's not what you want to see. You want to see different over different periods so you could see how many times the breakouts hit when there's a pullback and how many times the pullbacks hit when there's a breakout. If the market's making an all-time high, I could promise you something. All of your mega cap stocks that you're long are going to be mimicking exactly what the market's doing. It's not because you're a genius or you're smart. It's because you're over-correlating yourself, and it's because your patterns, you're trading the same pattern the stock market is mimicking. Nobody's ever explained this to you before, and nobody's going to take the time to ever explain this to you except me. This, what I just explained to you, can make a guru look really, really smart and can make a guru look like a real dumbass, depending on the market pattern. So number one, don't jump to any conclusions after your 20 last trades just because the market had an A line and you happen to take 5 A lines and they happen to make money doesn't make you a good trader. It just happened to make you a lucky trader. Now, Raleigh, I'm not looking at the comments, but if you're a smart person, what I just explained to you is a gold mine. And if you didn't get what I just said, then you need to rewatch this video at least 20 times.
Yeah, right? And the light switch has gone on for a lot of people here in the room. Some serious aha moments here, Roger.
Because I'll get an email. I'll get this email all the time. Roger, your last 15 trades have all gone against me. And I'm looking like, well, what kind of trades are they? They're breakout trades, but the market's pulling back. How are your pullback trades doing? Oh, they're all making money. Ah, okay, I got you. You guys understand?
Mm-hmm.
You're fooling yourself into thinking you're really, really good, or you're fooling yourself into thinking you suck when all you're doing is just, you're on the wrong side of the market. So make sure when you do this, so here's the last part I wanted to teach you. So when you do this, don't forget there's one other part of this equation. Is anybody still confused about what I'm saying?
Mm-mm.
Because if the market is pulling back, non-confirming, and you have 5 pullback non-confirming setups, they're all going to be winners. So I want to know what the market's doing during your setup, not just what your setup is doing. This is just 50% of the equation. This is you being really hard. If you don't look at this while you're looking at this, then you're either being too hard on yourself or you're being too easy on yourself.
Roger, are you suggesting from this perspective that another way to look at this is to start first by understanding what the market is doing and then specifically looking whether or not you're looking for a breakout or a pullback with or without confirmation?
You mean following my first rule, market first, market first, market first?
I think that would be your first rule.
Yes. But I just wanted to identify the 4 different scenarios that we look at.
No, it's brilliant.
You don't know how many times I'll get an email and I'm like, what time frame are you, like your analysis that you're jumping to a conclusion, good conclusion or a bad conclusion. What is it based on? The last 20 trades that happened while the market's making a perfect A line or breaking out?
Mm-hmm.
Ah, I see. Okay, great. That's going to really help you long term. Now,
it's good. And the other thing, Roger, is this, that I hope, and once again, I'm just kind of rehashing a few things here just to make sure we reinforce it. One of the big takeaways for me is this, Roger. There's a lot of things that you can use support and resistance wise to confirm. What's very, very interesting is the way you do use the 8-day and the 15A and your dotted lines, if you will, to go ahead and help to make those decisions, because that's a different twist.
Yes. But notice whatever lines you're using, if you're using the 5-day and the 21-day, which a lot of folks use, the what I just described works the same way.
It works. Yeah. If that's your confirmation levels. Yeah.
Yeah. If your level's different than mine.
Yeah, good point.
Exactly. Exactly. So you guys, I just wanted you guys to understand it. Now, let me just take this here.
And
Now,
Roger, I don't, once
yes.
again, the only other thing that came up here from several folks, they love your examples. They're wondering if you could pull up like the SPY or something like that and apply that to a current market.
Oh, of course. Yeah, I'll do it right now. One second. Let me just I want to just get something out. So in a few minutes, I'm going to give you a class on the Pro Trader dashboard. And in the Pro Trader dashboard, I use these type of trades all the time, like all the time. Matter of fact, already today, I gave you 2 of them. Our win rate currently is, I think we're actually at 94.20. I think we're beyond 94 now. I think we're at 94.20. This is over the last 400 trades, folks. People love the pit. So I'm going to talk about that in a minute, but let me go ahead and show you where we're at right now with the market. And by the way, I talk about this every single day. I just have never labeled it for you. Okay? So let's go to the SPY. The SPY right now is in a confirming breakout mode. It broke out right here, and it confirmed. So here, let me show you. Here, look. Has a high volume bar right here, and we broke out the high right here, and we've been just flagging. So see right here, we confirmed right here. This is a confirmation. Now we're just flagging higher. This is a confirming breakout trade on the SPY, and we're not overextended. And just FYI, as a side note, if we break this level right here today, 671.89, we can go higher. Hence why I gave you guys Oracle today and why I gave you a bonus trade on Tesla. That Tesla should be doing pretty good, actually. I think we got in somewhere here. Yeah, you guys should be doing pretty good on that Tesla. I really like Tesla. This is a perfect A-line right here. So here, look. We broke down, pullback, right? Confirmation pullback right here on Tesla. Confirming pullback. So Matt loves to buy them like this. See this bar? See how it comes right here? That's a non-confirming pullback. That's a confirming pullback right here. Okay? So we're in a confirming breakout right now on the SPY.
On the SPY.
On the SPY.
So Roger, and this is a subjective question, and maybe the answer is going to be it depends, but here's the question. Based on the way you look at the markets, is there a better winning percentage or a preference for you when you look for confirmation versus anticipatory? Does that get more to trading styles?
No, I'll tell you right now how it shakes out over time. And you may or may not believe me, but you will come to the same conclusion if you book like 500-600 trades over time like I do. You'll find out that confirming trades give you a higher win rate than anticipatory trades. Anticipatory trades give you a higher profit factor. It's always going to be that way over time. Over time.
Yep.
Over time. I guarantee you that. That's a matter. This is not a theory of mine. This is a mathematical certainty.
That's perfect, Roger, and it's kind of interesting. Better win rate, higher profit potential.
Now, what gives you a higher win rate? But here's the better question. What gives you a higher win rate, the pullbacks or the breakouts? It depends what the market's doing.
Absolutely.
It depends what the market's doing. Depends what the market. It's in the pit. I gave it as a bonus trade in the pit. So you guys understand? You guys understand what I'm saying? It's so I get a lot of emails. Roger, I just took 20 trades in this program, and I took 20 trades in this program, and my win rate here is 90%, and here it's 70%. What the hell? What's the market been doing the last 2 weeks? Now I understand. or I'm glad you did this conclusion, but what is it based on? The last 20 trades you took in a month when the market was doing the same thing? That's not a back test. That's just a lucky streak. Show me 15 different market scenarios that you're getting these conclusions, and then I'll believe you. And I think everything I'm saying right now makes perfect sense.
Sure does.
I'm not saying anything. I'm not really saying anything like. I'm just telling you that a lot of people get stuck because they can't get past the market first, how correlated. So these things that I'm teaching you are great, but if you can't figure out what the market's doing, and you'll always be in the best scenario. The pattern you want to trade is always ideally what the market is doing, because mimicking the market will give you the best results. Yeah. Anyways, so right now, Yes, it is, Steve, but I like to have a high profit factor and a high win rate.
And a high win rate.
It just
Put the
depends
two
on
together.
Steve, it depends on the personality of a person. For beginners, confirming trades are 100 times better because beginners have a very, very low self-esteem and a very high level of post-traumatic stress disorder. So in order for me to get them to mellow out and see the market and relax a little bit, I want to give you guys confidence. If you're a professional, I don't care. You can be thriving with a 50% win rate. Just have to have a 2-for-1. But again, most of you are like, yeah. But what you really want is an 80% win rate. I know how you guys play. I know how you guys operate. There's nothing you can fool me with at this point. All right, now I'm going to give you a class right now, a real class, something I haven't done in a while on my favorite program. This is the program where I like to hang out most of the time. Let me go ahead and I'm going to stop my share for just 1 second, and I'm going to share my screen. I want to do it on an advanced mode here. There we go. Oh, perfect. Raleigh, you should be able to see my screen, and you guys should be able to hear me perfectly right now.
Absolutely, buddy.
All right. So, folks, my suggestion, if you liked what you heard, and if you like to get in on this, this is the program where Uncle Roger, me personally, not Matt,